Hello everybody, hi, it's Giacomo speaking. Thanks for watching this quick video on Tesla stock. So in front of us there is a daily candlestick of Tesla stock with some technical analysis considerations, and there are some news about fundamental analysis. So it's what all the information that we need to predict the price movement is in front of us. So because we have technical analysis and fundamental analysis. So based on technical analysis, the market has been bullish since half of March. As we can see, this is the green line is the trend line, and now has been moving sideways. So based on technical analysis, we are in a sideways condition where the market is needed or is on hold. Let's say is pausing a little bit before resuming its previous trend. So ideally, what will happen next is that once this sideways trend will end, the price should resume its previous trend, meaning that the price should keep going up. So perhaps at the previous level or perhaps to the level that it was in February, almost 951,000 US dollar per share. So it's a lot of money. So but before going long, based on technical analysis, we need to wait that this top resistance line will be broken at least for 1 day or 2 days. So what we would like to see before going long is that this top red line for 2 consecutive days, it's better even than one, the closure price of a candlestick, of a daily candlestick, is above this red dotted line. Only in this situation we can go long. So I think we can go long. So technical analysis might suggest that the price can go up because it's a strong signal. If we have 1 or 2 candles 2 days in a row that both of them where the closure price is above this dotted red resistance line, it's a good signal that perhaps the price might go up. It's always perhaps, because the technical analysis, as we know, guys, it's not 100% sure. It's mainly based on percentages and probabilities. As I always say in all my videos, it's not sure, it's not 100% sure, it's just mainly based on probabilities. Now, so again, as in conclusion, based on technical analysis, we might go long because all the market is going up, it's bullish market, but just let's wait that this top dotted line will be properly broken. Then going back to fundamental analysis, all the news are in front of us. So Tesla has doubled or quadrupled over the last 12 months its own value, and then Elon Musk, because he has achieved its own goal, he has the rights to buy some shares. I mean, some 1,688 million shares of Tesla stock, so making him almost 800 million richer. But to do that he has to buy and then sell the stock in Tesla stock. So the problem is that because we are waiting for him to buy and sell its own stocks, the prices will change a lot based on his actions. So because the prices will change based on his actions, I think it's not really safe, or it's not really fair to invest in this market, in a market where the volatility depends or will depend on its CEO's actions. So it's not about the market, but it's about a person. So a person can decide the stock movement, the prices movement. So it's very risky, it's very dangerous, it's not a very safe stock to invest in, as well as because he really uses a lot tweets or giving messages through social networks, I think, and then with these messages he has the power to change the prices movement. I think it's not fair for the market, and it's not fair for us investors. Perhaps we can go short because we are thinking that this stock is overvalued, because I think it's overvalued. Its mean value should be less than $600, but it seems that it will keep going up. But he can text anything on Twitter, or he can do something. He can buy, he can buy all those shares. Perhaps he can buy the double of its own of those shares, and then the stock might jump up, because if he will buy, everybody will buy as well. So it's something like that depends on a person. So because the stocks that depends on on a single person, it's very volatile. It's very sensitive. So I will not invest in this stock that they are very sensitive. It's a risk. It's a risk. It depends on one person. So you can understand that it's very complicated to follow up the price movements if there's one person that can decide, the price movement. So it's not fair for us investors and for the business. So based on fundamental analysis, based on those information, the informations that they are in front of us, I think I would prefer to hold the position in this company, but technical analysis might suggest that actually, because the market is bullish, we should go long, but just wait that this dotted red line is gonna be broken. So because both fundamental and technical analysis are not on the same page, actually they have opposite ideas, this is the reason why I would stand aside rather than invest in this company. Thanks. That's all. Bye.